Good morning, everybody. It is November 10th, Macro Dashes, Kirk Spano, and we are looking at the FTX bankruptcy, as well as some other thoughts on what's going on in the world. We'll finish with something that I'm sure everybody thought I'd start with, but we'll get to that later. So over at Crypto Trade Shots, which is the crypto service that Shooter and I run, Shooter talks about FTX possibly becoming bankrupt without cash. It's probably true. As it turns out, the founder and CEO of the company fucked up. Says he should have done better. Now, a few months ago, he was buying up assets because he had the cash to do it. But apparently, and we're going to find out imminently, I would think, he did some things with the money that was very risky that involved his crypto trading hedge fund that he held separately. Anytime I see something like that, I become suspicious that there's a lack of transparency. When somebody says, hey, look over here, but I got this thing over here that you don't need to pay attention to. I said that several months ago. I wondered about it out loud, if he was doing anything kind of shady. I don't know that he was doing anything shady, but it's clear that he was doing things that were risky, to the point that his firm, FTX, appears to be on the verge of bankruptcy. The company needs somewhere in the range of $6 to $8 billion, and nobody really knows if it's going to get bailed out. My guess is that it will. Here's why. The company has some pretty deep-heeled investors, including Tiger Global Management, Temasek Holdings, Sequoia Capital, Lightspeed Ventures, the Ontario Teachers Pension Plan, and Crunchbase. But more importantly, you have Sequoia marking down their investment to zero in anticipation of a bankruptcy. Here's a question to ask. We just saw BlackRock get in bed with Coinbase. I told you a year ago that Coinbase was the safest cryptocurrency brokerage out there. And then BlackRock validated that by getting in the bed with them. FTX is smaller. Binance is the biggest in the world out of China, so I don't do anything with them. Coinbase seems to be the most hooked up in America. Why does this all matter? It's because all you crypto skeptics out there are still wrong. I'm going to show you why in just a second. There will be crypto. There will be lots of it. Bitcoin will remain a store of value for the rich and for institutions and for emerging markets looking to diversify their foreign currency holdings. Ethereum is in the lead on digital contracts, but there is another one that Shooter's been all over. It seems to make a lot of sense. So let's walk through a couple of things. First off, this is a big deal. It is part of the end of the speculative phase of cryptocurrency. We are entering that trough of disillusionment, of despair, and really I think we're closer to the end than the beginning. We've been in what people have been calling a crypto winter most of the year, as I predicted in January when I was on air with Dr. Sean Stein-Smith. And I said when Bitcoin was in the 40,000s that it was heading to 20, and everybody kind of shook their head at me. Got comments that I was out of my mind. And I laugh at these people who say, well, I'm a Bitcoin maximalist. Whatever, dude. You're never going to buy your pizza with Bitcoin. And to me, if you're not buying your pizza with Bitcoin, you are not maximizing your value, because pizza is God's food. But the reality is that you should be a Bitcoin mediumist. That's what I've declared myself to be, a mediumist. I believe there's a role for blockchain in the world. I think it's gigantic. I believe that there's a role for Bitcoin in the financial world. I think it's limited in scope, but due to the limited amount, the finite amount of Bitcoin that's out there, it'll rise in value. Bitcoin is still going to go to six figures. Where in the six figures? I don't know. No telling where FOMO can drive it. I suspect the chart looks a lot like the long-term chart of gold 30 years from now. Up and down, crash into the moon, crash into the moon. Several times a decade probably, until it narrows its range, much like gold has in the last 10 years. Gold spiked at 1900 in 2012. At that point, I said it would crash, and I even made fun of the gold bugs on MarketWatch. If I could find the comment section of those articles, that would be spectacularly entertaining. Gold crashed again, down to 1100 or so, and now it's back up at, 1600? But it sniffed the all-time highs at 1900 a couple of years ago. It's essentially range-bound, 1100 to 1900. And gold is going to break out over 1900 sometime this decade. Why? Because there's a looming shortage of gold. It's getting too expensive to find new gold. So the gold that we have, as demand for it slowly increases and supply won't be able to keep up, And eventually the gold bugs will stomp their feet and pound their chests again, sing their little song, and they'll push it way high. 3,000, 4,000, 5,000 maybe per ounce of gold, and then it'll crash again. If you're a position trader, these are wonderful opportunities to buy something and hold it for a year or 2 or 3 or 4 or 5. Then sell it. And everybody tells you can't sell this. It's just going to keep going up. When the Uber driver tells you, man, I wish I had more gold. I should have bought more gold. I'm going to buy more gold even though it's expensive. The Uber driver, of course, is the new age shoeshine boy who used to have all the tips. 6 months and a year ago, when everybody was telling me that they needed to get into Bitcoin because they're a maximalist, I scratched my head and I asked them why. They told me about freedom, how it was going to save the world, how Bitcoin was going to do everything the government couldn't, and central banks couldn't, and business couldn't, that we would all just get rich on Bitcoin. And the reality is that, like almost everything else, Bitcoin is going to establish a range that it trades within, and sometimes it'll be at the high end of that range, and sometimes it'll be at the low end. We're very, very close to the low end right now. Might be at it after yesterday. Yesterday might have been the bottom in Bitcoin. Why do I say that? Because there was forced selling yesterday by FTX and the panic that went along with it. I put a post up in the chat room that talked about it. Probably easier to find here. Actually, it won't be. Here's the little blurb I put in the margin of safety chat room. I marked it to all. So if you're receiving notices, and you should be, I only use this all button to send out a message that I think you need to read. And I don't send out many, a few a week. That's it. So when you are a member of Margin of Safety Investing, you should be signed up for these all alerts. This is what I told you yesterday. The market dislocation was a buying opportunity because it was forced selling. It had nothing to do with sentiment. It wasn't something that you can really technically understand because there was no setup technically. The setup technically actually had been to hold this line, hit it 3 times, rebounded every time. It only broke down below because there was forced liquidation. Somebody asked the question, of course, is whether 14,000 ends up being the price that it gets to. That's not the question, not even a little bit. You all have to stop focusing on trying to catch the bottom price. You're not a sharpshooter. Nobody is, not in the stock market. That's why I tell you to scale in, because if you use a buckshot approach, you're sure to hit it, and 1 or 2 of those buckshots will accidentally hit the bottom. If you are focused on always catching bottoms, you will continually be frustrated because you might get lucky to hit 1 out of 5 over a long career if you're firing 1 or 2 bullets. There's nobody on earth that can do it. The proof is that none of the billionaires are stock traders. If they were able to do it, don't you think somebody would have done it and become a billionaire by now? There is not a single trader on the billionaires list that has done it by day trading. The only billionaires I know of who are traders on the billionaires list are the long-term traders like George Soros and Warren Buffett, who hold for years usually. Soros might mix in a swing trade. The only high-frequency trader is Ken Griffin over at Citadel, I believe, and that's because he's cheating. He's using technology to do things that you can't do. Should be illegal, but it's not, because obviously when you have that much money, you can buy politicians. Stop thinking about trying to get the absolute lowest price on anything. Buy 3 or 4 or 5 times over a period of time at wide price intervals in 1 or 2 of your picks of your trades, right? And 1 or 2 of your trades will be really close to the bottom. So for those of you who bought Bitcoin yesterday, what are you up today? 10%? 5%? I don't know. I haven't looked. Square is up a lot. DApp is up 5 or 6%. And why is that? It's because we recognized the dislocation in the market and said, well, this is a good spot to have a nibble. And if the dislocation lasts longer, then I'll buy more 10 or 20% lower. Now, here's the question. Does it hit and take another leg down? Again, hard to know, because this is a market where it's very easy for a few $1 billion to come in and do a lot. What is probably going to happen with FTX? You're probably going to see a big investor come in and take it over. Now, they might buy the firm for $1. Legit. They might buy FTX for $1. Then absorb the $6, $7, $8 billion of liabilities, which is what it sounds like it has. This guy, SBF, Bankman Fried. That's actually kind of funny, isn't it? He's a bank man that got fried. He owns about 8% of Robinhood, so he's going to have to liquidate that. Crypto's going to survive. FTX may or may not. I'm guessing it ends up going by a different name with new ownership. One of the things that Shooter covered in his crypto piece this week, he covers a lot of trades. He's always covering the Grayscale Bitcoin Trust. Yesterday I told you to buy it, but he's looking at the various altcoins. Here's the one that jumped out at me. I'm not really into altcoins. You know what our thesis is, right? What is our thesis? Short story is that most cryptocurrencies are going to zero, but there will be survivors that rise to much higher prices. Bitcoin and Ethereum probably be among the biggest, if not the biggest, be a handful of others to get involved, probably with existing institutions. So the cryptocurrencies and the tokens, they're different. They get involved with the existing financial institutions will have life and value. So what is the Link token? Well, it is also a smart contract token. It helps connect different pieces of data to facilitate transactions, inventory management, contracts, everything that has to do with commerce, that has multiple pieces of information that need to be taken into account. What is the biggest financial institution in the world? Come on, fast. Somebody tell me. Somebody should be able to come up with this one really fast. No, not the U.S. government. What is the biggest financial institution in the world that you should be able to come up with very fast? No. The hint is fast. Oh, you guys are terrible today. The SWIFT system, right? The world's leading provider of secure financial messaging. It's what moves money around the world, largely controlled by the United States. We have partners. It is the biggest financial network on the planet. Who do they pick to help them with transactions, right? They're also using Ethereum, but now they've partnered with Chainlink right here. So Chainlink broke through the support. You've seen me draw lines like this. Breaks through the support of the trend line, crashes. Now it finds the new support, starts to create a base, because partnership with SWIFT could be a pretty big deal. And here's the thing I wanted you to take a look at. Here's what the SWIFT system is saying about cryptocurrency. Interest from institutional investors moving into crypto has been undeniable from the SWIFT strategy director. You need to take this moment to get over yourself, if that's what you need to get over, or whatever thumping, pounding sound you're hearing that keeps you out of cryptocurrency. And again, I'm not telling you to put a lot of money into it. People always tell you put 5% of your money in gold. Whatever. I don't know if that's true either. But you should have some of your money directly into Bitcoin, Ethereum, and now I think Link. And it doesn't have to be a lot. A percentage of your bank savings that you don't think you'll ever use. That's how much. If you're sitting on extra money in the bank with the idea that, I'm probably never going to use this unless Armageddon comes, or it's the end of my life and I got to pay the nursing home bills, or my third house over on Fort Myers Beach gets blown away and I got to figure out what to do, right? You have money in the bank probably that you don't think you'll ever use if you're in your 50s and 60s or 70s even. If you're lucid enough to manage your money, you need to have an exposure to Bitcoin, Ethereum, and I'm adding Link to the list. Why did I invest in Coinbase? Talk about investing in Coinbase. Again, I'm invested in Coinbase through DApp. But I've told you can invest in it too if you're a little bit more aggressive. Why was Coinbase something that I was interested in? Why is it the one where I picked to keep my money? Because it was the biggest and strongest in the United States. I said that institutional investors would get involved with it. BlackRock did, the biggest institutional investor. Now SWIFT, which is basically controlled by the U.S. government, 2 degrees of separation, but that's really just to maintain plausible deniability. That's why you should buy Link. What else is going on in the world today? Inflation numbers, and I think somebody was been telling you that inflation would start to come down at the end of the year. Came down. Surprise, surprise. It's almost like we've been talking about this for 6 months or longer, that this was the time frame that inflation would start to come down. The markets loved that so much that the CPI was a little lower today, that we're having a monumental stock rally today. I mean, huge. I'm not sure I remember a 5% update in QQQ ever, honestly. I mean, I'm sure it's happened. I just don't remember it. Let's keep this in mind. Quantitative tightening is still going on. Even if the Fed only raises interest rates a quarter point in December, which is the scenario that I described, that I thought was quite possible, quantitative tightening isn't going to end for a while. We're actually going to have to see the sniffs of recession, see quantitative tightening come to an end, or for something, to break, in which case the breakage will probably lead to unemployment. We won't get the unemployment signal. And as I've talked about, employment in the United States being high is largely structural at this point, because as the baby boomers trickle out of the workforce and we don't allow immigration to replace them, it's going to be a tight labor market. I had somebody post some very racist comments on my post this week when I suggested that we needed more immigration. He just prattled on about how the people coming over the border were just stealing money. They were running scams on welfare. I mean, it was pretty clear he didn't want people who weren't quite white enough in the country for him. I asked for it to be removed from the thread. We'll see if they did. I suspect they did pretty quick. In any case, inflation is tied to commodity prices, oil in particular, supply chains being locked up. What else have I told you about the supply chains being locked up, right? Largely because of China's zero COVID policy. What two guys are getting together in a week? Two pretty big guys. What two guys are going to talk about this? Now, some guy named Biden and another guy named Xi. Actually going to meet face to face at a table. Here's how the conversation is going to go. Hey, Xi, it's Joe Biden here. You recognize me. Oh, right. You're looking at me. Sometimes I forget. Oh, come on. I can make jokes. Xi, here's the deal. I can't let you invade Taiwan. I would actually have to blockade you or something. Probably fire back, or at least give them all kinds of weapons so they can fire back and keep your troops away with our ships. Let's avoid that situation. How about this? How about we'll prevent you from stealing our technology, because I know you can't help yourself. We'll just, we'll throw up some walls so that you're not tempted like you've been doing. But we'll let our people go back and work for you, and the technology will slowly trickle in, because, we don't want you to be hungry or anything. But you can't invade Taiwan. We can stick to the one country policy so long as you treat them the way we treat Puerto Rico, which is we own them, but we don't really do anything good for them or bad to them. It's there. We use it from time to time. We have a special relationship. You work something out with Taiwan. Use them as a hub. Let them pretend to be yours. I mean, they'll be yours. You pretend that they're yours too. I mean, yeah, they're yours. Let's just go with the status quo. We won't let them call themselves independent. We'll come up with a special term. It'll be different than the last one we used. You do trade through them. They'll make semiconductors for you. And nobody has to blow anything up. But I know that you're a big country. You're a big guy. You're a super great, important guy. Throw a little Trumpism at him. You're the biggest, strongest, toughest, greatest guy in Asia. Just, exercise some self-restraint. We won't put the screws to you. You don't put the screws to us. We'll just let our tentacles go all over the world because, this Putin thing, you really got him good. So, put the screws to him a little bit more in Ukraine. We'll let Ukraine become some sort of, Switzerland type of place. We'll even appease Putin a little bit. He just has to get the hell out of there. Could you make that call for us? Xi will drink his water, shake his head, say something that doesn't relate to anything Biden just said. It'll be okay for a while. It's all politics, folks. And it really comes down to who has control of what. I didn't know they put in that new headline. I thought they had this one, the copper one. But we'll go back to that other one because we just talked about that too. Copper. That market's going to be tight for a long time too. We have ideas about how to invest in that. But even with today's news on inflation, I come to this because we just talked about this too. In that article I wrote this week, I talked about how the Fed might start to talk about how they're beating inflation come December. Already in a headline. Folks, we've been so far ahead of this. It's a little bit rough because prices of some of our assets haven't gone up yet. But when you see days like today where things move that much, you should really be asking yourself, am I really waiting that long, given that some of our stocks are up 30% today? If you've been scaling in, you have good prices. You don't have the lowest prices, but you have low prices. And for those of you who got excited today and wanted to sell something, why? Again, if it was a trading position, if you went into it thinking like it was a trade, then fine. But if you've been scaling in, these little tiny moves of 5%, they don't mean anything. We need to see a trend breakout to the upside. And as I've said, the fourth industrial revolution, the clean energy, and everything related is going to do really well whenever the presidential cycle rally starts. I believe it could start by December. What is inevitably going to happen is that this rally is given back, either partially or in full. I still think that we get down to around 3,000 on SPY. Might not be until next year, but we'll see. All the smart people on Bloomberg are saying, as we approach 4,000 on SPY, we have to take our profits. And that's fine. I'll put out a bunch of covered call ideas. And obviously, anytime I say you can write a covered call on anything, you can trim it too. But we've been right about inflation, how it's going to work. That last article, they gave me an editor's choice actually on Monday, has got it all outlined. So if you haven't read this, see an editor's choice. Pretty neat, huh? Go read this. We're at Seeking Alpha. Because it hasn't changed. Because the CPI, which we said would start to soften up, started to soften up. So one day doesn't change anything. This is all the process that we've been talking about. For those of you who get hyper about one day, my God, start drinking or something. A little CBD. I don't know. Extra turkey. How about that? Extra turkey so you get some tryptophan. What did I say in this article? Nonetheless, here we are in a bear market that threatens to get worse, even if there is a short-term technical rebound within days. I mean, it's almost like I knew there was a CPI print coming out. So let's sum it up. Cryptocurrency is going to exist forever. Most of it is going to zero, but not all of it. The SWIFT system, which is the biggest financial institution on the planet, says there's no denying institutional interest in crypto. So they got into bed with Chainlink and Ethereum so that they can process this stuff. Buy some Bitcoin, buy some Ethereum, buy some Chainlink. But open your Coinbase account. The link is at the top of our chat. It'll be in the YouTube as well. Put $100 in so that you get your $10 bonus. They have little classes and you end up getting, a fraction of a coin of something, usually worth like $4, but they're good little classes. They help you learn what cryptocurrencies and tokens really do. And it is part of the digitization of commerce. And that's important because it's coming, it's happening, it's already being done. Think of it like scaling up a factory. We know that there's going to be a ton more EVs produced in 2026 and 27, but it takes time to build the factories and move the supply chains and then get staffed up. Same thing is happening in crypto and in blockchain. You should be owning DApp or picking out, a little basket of companies. I love DApp. DApp, the ETF DApp, DAPP, is basically a dozen companies are like 75% of the fund, and it's Square, MicroStrategy, and Hive, and Riot, Marathon. It's a great fund. You don't have to pick out a dozen blockchain companies. It does it for you. Weights it pretty well. The options market is emerging, and it prevents you from outsmarting yourself by saying, well, I'm going to do Coinbase and Square and this one, and then it's the other three that go up. Just buy the basket. The reason I own Square in some accounts as well is because I think that there is a small business boom coming. Everything that I've talked about with small business seems to echo the 1970s coming out of that. And I think I saw a headline on that just today somewhere. So everything I've been talking to you about with small caps and small companies, entrepreneurship, I think that's all coming, especially with what we learned on Tuesday. If there's not a red wave, if there wasn't a red wave on Tuesday, we might never, ever see one again. Think that through. The repudiation of President Trump happened yet again. So the Republican Party is at the front end of going through some soul searching. And the giant donors are the ones pushing it, so it's going to happen. The giant donors are saying, look, we have to move away from Trump. What does that mean? That means they're going to move away from Trump. Now, can Trump get the nomination one more time? Maybe. But there's a very easy path for the Republicans to defeat him. Don't run 7 competitors. Run 2. And in a 3-way race, Trump, DeSantis, and somebody else, Trump ain't going to win. Because at some point, DeSantis and somebody else cut a deal. And that probably won't be enough to beat the Democrats in 2024 because they're going to run on a platform of, let's fix all this broken shit. And by the way, if they haven't paid off student loans by then, that's going to be part of the campaign. Hey, here's how we can fix education, looking backwards and going forwards. And in that framework of the world where the Democrats at least have partial control, there's no red waves to throw things outright, things that are in play right now, the things that are happening right now and accelerating are going to keep going in that direction. Clean energy, fourth industrial revolution, EVs, blockchain. The oil age is almost over. We're just about at peak oil demand. Probably will be there next year or the year after. Probably next year, it looks like, is peak oil demand. That's how close we are. All these things that I talk about over the next 5 or 10 years, they're here. There was no repudiation of changing the world on Tuesday. In 2024, when there's a presidential election, if the Democrats find somebody who is like Biden, but 20 years younger and looks good on camera and doesn't stutter, doesn't forget his name or who he's talking to or where he is, come on, I joke. The Democrats will probably have a pretty big win in 2024, be my guess, especially if the economy is good, which it will be because everybody's going to have a job. And everybody's going to have a job because we don't let any immigrants in the country. If we finally let a couple immigrants in the country, probably get rid of the inflation too. But like I talked about, maybe they want inflation. Maybe they really want inflation just to keep whittling away at the debt. Hard to know. But I'll tell you this, between the dollar and blockchain based currencies, Bitcoin in particular, I mean, I'll just say Bitcoin. Between the dollar and Bitcoin, those will probably be the two best currencies in the world for a really long time. And the yuan's going to get stronger too. But the dollar will come down a little bit. And as you saw with the emerging markets that I told you to buy 2, 3, 4 weeks ago, look at the moves in emerging markets. And in particular, look at some of the companies that we've bought. I'll talk about those on Monday. All right. Have a good day. I actually have another webinar to jump on. Take care.